I'm Reese McFadden with Workplace Benefits, and a lot of what we do is educate our clients on how health insurance actually works. So what we've decided to do is start a series on Health Insurance 101, just to explain how health insurance works, so you can easily understand your plan. Today what I've done is outlined a traditional plan. It starts here with a $1,000 deductible, 80/60 coinsurance, and a $3,000 out-of-pocket maximum. Now what I'm going to do is draw a line here and translate that into English. Let's say, and I'm going to draw an arrow. Let's say you have a big injury or illness, God forbid, but you do need to use these benefits. Let's say you have a $100,000 claim. Well, what you're going to do is pay your first $1,000 up front. That's your deductible. Should be called a down payment because it works the same way. So now you've paid $1,000 and you have $99,000 left. So what your insurance company is going to do is going to kick into the coinsurance. So of that $99,000, your insurance company is going to pick up 80% if it's in the network, which most providers are, or 60% if it's out of network. So they'll pay 80% of that $99,000 and you'll pay 20% until your 20% add up to your out-of-pocket maximum, and in this case is $3,000. So in that scenario, you've paid your $1,000 deductible, left $99,000, and your 20% added up to $3,000. So you actually pay $4,000 and your insurance company paid $96,000. Now we're going to discuss the below the line benefits, and I'm going to draw an arrow there. This is what I call your everyday expenses. Again, these benefits are only going to come into play if you have something big happen: hospitalization, surgery, illness, that sort of thing. Now for your everydays is what I call your copays. You might have a $25 copay to go see your primary care physician, or a $50 copay to go see your specialist. That's your internist, cardiologist. Most times OBGYN is also included as a specialist. So pretty much you can go to the doctor if you have the flu, go to your family doctor. You'll pay $25 and walk out the door, which is nice. And if you have to go see a cardiologist or someone like that, you'll pay $50 and walk out the door. Now if you're prescribed something, let's say if you, for example, go to your primary care physician and you pay your $25 copay for the flu and they prescribe you a Z-Pak. You go to CVS or whoever and you're probably going to pay that $4 copay for your drug card. It's $4 for generic drugs, $25 for brand drugs, and $60 for preferred drugs. And again, this is all just in an example plan. So, it'll depend on what tier your drug falls in under. For my clients, I typically tell them if their drug has a commercial, you're probably going to be paying this higher tier drug. So anyway, that's just a very simple synopsis of an example traditional health plan. If you would like to ask us more questions, please refer to benefitwork.com and contact us, and we will try to help you out as much as we can. Thanks, and have a great day.